Snipers, you have to see what's happening to the cryptocurrency market today as we head into futures markets opening later today. Bitcoin is still taking the path of least resistance, which is sideways to a little bit higher when there's low volume. And notice on the 4-hour chart right now, we are starting to overextend inside of the symmetrical triangle, getting towards this apex, already 90% there. That's typically a sign of weakness. If we start to overextend, we can continue to expect sideways to higher price action, the path of least resistance, of course, when there's low volume. And so I had to get this critical Sunday update to you guys because when we look at what's happening to traditional markets and how we're going to expect futures markets to open, there are a lot of puzzle pieces that we're going to be watching, especially after what happened last week with the DXY and the job numbers. And then we'll have to take a look at what's happening to Ethereum, because notice here how Ethereum is inside of this channel above the monthly open with today's daily candle, showing strength to the upside further than Bitcoin, because the Ethereum to Bitcoin chart is trending up, already showing 5 daily candles closing in green over the last 5 days, heading towards our target of 86,000 Satoshis. And that's the storyline that we've had on the Snipers channel for the last 90 days. The fact that Ethereum will be the stronger asset against Bitcoin. And of course, altcoins are still inside of their season, showing strength. You can see here as well, staying right below this 50-day moving average, but we've never broke the 100-period moving average on the daily chart just yet with others' dominance. And so what we need to monitor, of course, is Bitcoin dominance still trending down, but more importantly, the total cryptocurrency market cap chart at home base here at this 20-week moving average with this weekly candle closing in 6 hours. We need to get ourselves above $1.6 trillion in market cap in order to assume continued upside for the overall market, including altcoins. And then when we look at what's happening to traditional markets, of course, the job numbers were released. And when we look at the DXY, we are showing a potential sign of a reversal on the 4-hour chart. Notice how we got right back above this previous weekly open, and weekly open closing the week showing strength above the weekly numbers. And so this is a huge puzzle, because if we see the DXY continue further up, that will affect traditional markets and cryptocurrencies. But if we get back in this range, that could be an extremely positive thing to allow the environment to be conducive for growth when it comes to the cryptocurrency market. We have a lot to cover today. You guys are watching the Snipers channel. My name is Naeem Al-Abidi. Remember to smash the like button for the YouTube algorithm. And this is a quick Sunday update because, of course, as I mentioned yesterday, I wasn't expecting us to break the $35,000 level. And that was an extremely bold statement because the price was at $35,000 when I said that. But I knew that the path of least resistance when there's light volume is always going to be sideways to a little bit higher. So we can continue to expect that for Bitcoin. This symmetrical triangle has become a lot less significant now that we've failed to break out. We've already tried to get above, and the bulls, of course, failed. And if you guys watched my video yesterday, I talked about the distribution of supply right now with Bitcoin, and at 40,000 US dollars and above, we know there's a lot of distribution. Over 10.5% of the Bitcoin active supply is above the $40,000 level, up to 59,000. And so anytime we're going to see price come up and try to break 38,000, which would be the first confirmation that we're going to come up and test 40,000, where if we look at the daily chart, notice how there's confluence at this exact area with the 200-day moving average, with the $41,950 major level, and the distribution zone above 40,000. This is obviously going to act as a major resistance. And so if we come up, we can expect a rejection here. But what we really want to do at this point is get above the monthly open for Bitcoin at 37,400, because that would be the early signs of a successful recovery operation. But at this point, as I mentioned yesterday, the fact that we've only formed higher lows and no further lows is still positive for a potential reversal here for Bitcoin. And I stand true to this 35,000 level when it comes to the downside potential. If we break 35,000, we could potentially expect up to 30% downside to 24,000. You guys know what my worst case scenario is, but remember, we've already seen a wick to 30,000. All of the longs were already cleared here. For the institutions to take price back down to see another wick is highly probable because the longs are already cleared. That's not going to be an issue for institutions. And of course, it is still a possibility and a scenario on the table. We have to keep that in mind because, of course, we are elongating inside of the symmetrical triangle. And so to be quite honest with you, we can almost say that we can delete the symmetrical triangle. But of course, I'm going to update the charts tomorrow and also change our previous weekly opens, as I always do on the Snipers channel. And let's just look at Ethereum really quick, because this is extremely important. Ethereum is showing more strength than Bitcoin right now. And notice how we're inside this channel. If we start to see Bitcoin break above 38,000, we could expect Ethereum to come back to test 3,000, and above 3,000 opens the door to the $3,500 level. So there is a lot of upside potential here for Ethereum, over 25% upside potential. And notice how the Ethereum to Bitcoin chart, which matters way more than the Ethereum to US dollar price when it comes to predicting the overall trend and direction, also has an up to 15% upside potential. And this is a way more volatile chart, and it tends to not just break at major levels, but wick into other levels. And so that 25% upside potential for Ethereum is on the table, in my opinion. And in order for Bitcoin to assume similar returns, we'd have to see it get all the way back up to the $50,000 level, because that would also be above 25% in profits, about 37%. And that $44,800 level would be about 25%. So you kind of have to ask yourself, is it more likely for Bitcoin to fight this $40,000 resistance level and get back to 44,800? That's a 25% return. Or is it going to be easier? And by the way, we have to cross this 200-day moving average to get there. Or would it be easier for Ethereum, which is already above the 200-day moving average and 100-day moving average, to move up above this channel where in the past we've seen breakouts to new all-time highs? And for us to see that 25% return, I think this is the easier way to get it. And that's why we monitor multiple assets. And of course, we look at the overall environment in the market. And talking about environments, the total cryptocurrency market cap chart has an extremely important weekly candle closing right now. So far, there has been no weekly candles throughout the whole bull market to close fully below home base at the 20-week moving average. Even the last 3 weeks, every candle has held on with at least a wick or a body to this 20-week moving average. At this point, we want to see momentum and strength above $1.6 trillion, and we want to monitor the next candle opening in 6 hours and whether or not it's going to be able to hold on to this 20-week moving average. We don't want to see what happened to Bitcoin at the 20-week moving average, where the first time we got below it, the next 3 weeks we had full candles below the 20-week moving average. That's a whole different storyline, a whole different picture in the overall market, and that's why you have to address that as an umpire. Looking at this in a neutral perspective, is it just Bitcoin that's in a bear market, or is it the overall market? I don't think the overall market is yet in a bear market. I don't think that's fully confirmed, but we could say that Bitcoin is in a short-term bear market for now, and realize that below 30,000, the next distribution for Bitcoin is going to be 27,000, 22,000, and 20,000. So that's why if 30,000 breaks, 24,000 comes into the table. And for those watching the Snipers channel, we even go further than that, and we look at 35,000, because we know that that's the real major level. So if 35,000 breaks, 24,000 comes into the equation. Others' dominance doesn't look bad though, and so Bitcoin dominance is still trending down. That could be a potential decoupling effect that we have to monitor here on the Snipers channel. And for those subscribed to the channel, you know we will continue to monitor that. And as we start to see futures markets open, we want to monitor where institutions are hedging their money. We saw this push to the upside on Friday for gold. That was a very positive thing when we saw the unemployment numbers come out and people expected more jobs to be created, and we didn't get that. And of course, that brought the DXY back down, and that allowed traditional markets to see more breathing room to the upside as we closed the week yesterday. And so we're in a very interesting position, because Thursday, our puzzle piece was that the DXY was reversing. We had the unemployment numbers come out, and then the next day we had the jobless claims, and then the next day we had the unemployment numbers. And so we saw that antithesis literally the next day, where it brought the DXY back down. And so this DXY chart is literally the chart that affects every other market, because the strength of the dollar is what affects the asset prices in the US dollar, right? Because that's what we're all trading on, against the US dollar. And so we have to monitor the DXY as we head into next week. And of course, the S&P 500, due to the DXY seeing that break back down, saw a potential bullish candle that would assume we're going to see further highs with the S&P 500, still very bullish above the 50-day moving average, of course, way and above the 20-week moving average, which we've yet to even test. And that's a very positive puzzle piece here for the cryptocurrency market. And then we'll monitor the gold to Bitcoin chart in this potential cup and handle formation. We know Bloomberg is changing the storyline right now, and so we do have to monitor this. And with that being said, I just wanted to give you guys a quick Sunday update. I appreciate each and every one of you snipers. If you want to win one of my favorite books on investing, Principles by Ray Dalio, comment below and share this video, and you'll have a chance to win. I'm going to go ahead and pick a winner from our video yesterday. Let's go ahead and see this. Jake 2.0 says, it's just repetitive at this point to say that you host excellent technical analysis, but it is nonetheless my opinion. Keep up the great work and have fun in BTC Miami. Thank you so much, Jake. Shout out to the people I met at Bitcoin Miami. You guys are all amazing. It's so nice to meet each and every one of you guys in our community, and hearing your stories and the way that we've impacted you. It truly warms my heart, and I appreciate each and every one of you snipers. So send me a message on Instagram, Jake. You want a book. And with that, thank you all for tuning in today. Until next time, it's going to be an exciting week. Snipers